India is a land of diverse cultures, timeless traditions, and rich heritage. Banking and financial inclusion of every individual plays a crucial role in the economic development of the country. However, the sheer, diverse and expansive landscape poses a challenge for setting up of brick-and-mortar banks and financial institutions in every nook and corner of the country. There was a need to bridge the gap between a potential customer and the bank. Sabke in Hindi means for everyone, and in English it means below 1,000. The name symbolizes its vision of universal financial inclusion by creating technology-enabled touchpoints within 1,000 meters of every household.
What we do, we essentially link banks to last mile customers, the unbanked customers, in the regions where banks don't necessarily reach them in a brick and mortar fashion. So they tie up with us and we kind of find the right customer base, acquire those customers, do all the paperwork that's required so that the bank then onboards this customer and provides the services. Whether it is a savings service, whether it is loans or any other payment services, we enable those things by acting as a bridge between the borrower and the lender or saver and the bank.
తీసుకోవాలన్న అనుకూలంగా ఉంది ఆ బ్యాంకులో వేసి సమయం వృధా చేసుకోకుండా ఇక్కడనే అనుకూలంగా తీసుకొని మా పనులు మేము సాగించుకుంటున్నాం.
The way the model works is that we deploy a fleet of agents on the ground, typically local retailers who run their own regular shops. We try and convert them to act as or double up as a banker. Effectively, they become human ATMs. We hand out this low-end technology equipment, which is a mobile phone and a small printer, and they sort of then use their own cash, which is generated in their regular business, to be able to provide services to the communities around them. Over a period of time, we also added many products on this platform. We now give out loans in groups of women. We give loans to individual entrepreneurs. We collect savings. We do money transfers. We allow people to withdraw their account balances. So that's kind of how we have built the whole model, which is in a way a model that enables any financial institution.
Sabke's feet on the street and technology platform which it developed really helped the bank to go out and expand their operations in these areas. So over the last 5 years, we have grown 100 times. We are well recognized in the banking world. We have a good support from our investor team. We see that confidence keeps on growing. We have recently concluded 2 rounds of investment and investor confidence is really high on us. All this has happened in a very short while. There is no looking back from here. That's what I feel. We are growing and we are growing very strong.
Sabke has developed software applications that are integrated with core banking systems and work on mobile phones, allowing the users to perform financial transactions in a safe environment, eliminating the need for a traditional brick-and-mortar bank. The future of banking is digital, and Sabke is doing its bit in moving India towards a safer, more accessible digital space. With Sabke expanding its reach and its ever-growing customer and agent base, we are positive that the company's mission to connect every individual and household to mainstream financial system, thus promoting an inclusive and prosperous economy, standing true to its motto, Sabke liye samriddhi laye.
नए जमाने के नए हैं रास्ते, लाए हैं कुछ हम सबके वास्ते, सुनेंगे सबके दिल की बात, रहेंगे साथ दिन हो या रात, हम हैं सबके साथ हैं, हम हैं सबके साथ हैं. व्यापार हो आगे बढ़ाना, जब सबके का हर पल है साथ, तो साथ ही भला क्यों घबराना.
Today, let's take a walk through the serene streets of Pachera village in Raipur. Here, we will meet Urmila, who runs a thriving dairy business and has been associated with Sub-K for a long time. She was a beneficiary of group microcredit, who later sought individual credit for expanding her business. Microcredit to women has proven to be one of the most promising and cost-effective tools to create an inclusive society. Sub-K Impact Solutions aims at recognizing the dreams of women entrepreneurs by bridging the financial divide and giving them access to capital to unlock their potential.
हम दोनों पति पत्नी हैं और 4 बच्चे हैं, 2 लड़का 2 लड़की। सबके कंपनी से जो लोन ले हैं ना, उमें हमार बहुत मदद हुई सर। हाँ, बहुत मदद हुई से काहे ना वहाँ 22 मनबर टाका वाका बनाहन और ये सीट वीट लगाहन, पंखा है, सब चीज के ना सुविधा भैंस गायवर वो धीरे धीरे लोन लेत गए ना तो यही करत गए हैं।
This financial assistance helps women contribute equally in their households, instills confidence in them, and improves their financial literacy exponentially.
सबके कंपनी से जब से जुड़े हैं ना, हम ना बैंक में लेन देन चालू करे हैं और थोड़ा जानकारी मिली से बैंक से भी कि ऐसे लोन लेते, ऐसे पैसा ये करते, निकालते कि बैंक में डालते तेला।
Not only do these loans help women in improving their financial stability, but also in elevating their way of life, especially when it comes to their next generations.
अच्छा बिजनेस भी चालू करे हैं और काहे घर परिवार में भी अच्छा बदलाव ऐसे कि बच्चा मतलब भी अच्छा परवरिश से ही कर सकें कि पढ़ा लिखा सकें और अच्छा शिक्षा दें कि पढ़ो कुछ आगे बढ़ना है करना है तो मतलब भी जाए इसे कि ना बोले हैं।
We at Sub-K have always strived to help women entrepreneurs by catalyzing their aspirations, enabling them to live a life of dignity and self-reliance. We have touched the lives of millions of women like Urmila and will continue to do so. Financial inclusion is the way the government of India strives to take the common man along by bringing them into the formal channel of economy. Sub-K Impact Solutions Limited manages and controls inclusive transactions on end-to-end basis through recruitment and training of local entrepreneurs as business correspondent agents who serve as human ATMs at the last mile of connectivity, thus ensuring them access to basic banking transactions. Let us meet one such determined agent couple.
నా పేరు సురేష్ కుమార్, నాకు మా వైఫ్ ఉమాదేవి, నాకు 2 పిల్లలు ఉన్నారు. నేను ముందు SBIలో టెంపరరీ జాబ్ చేస్తాను. అందువల్ల నాకు కానీ మా భార్యకి కానీ ఇద్దరికి SBI CSP పాయింట్లు తీసుకున్నాము. ఇంతకుముందు మాకైతే ఏ విధంగా సోర్స్ లేదు. SBI CSP పాయింట్ తీసుకున్న వల్ల మా ఫ్యామిలీకి కానీ మాకు కానీ మా ఊర్లో కానీ మా గౌరవము అంతా కొద్దిగా పెరిగింది. మేము 10 మందికి సేవ చేయగలుగుతున్నాము. దానివల్ల మాకు ఎక్కువ మేమంటే ఎవరు అనేది ప్రజలకు తెలిసింది. ఏమి SBI పాయింట్ తీసుకున్న దానివల్ల అది తీసుకున్నాం. వాళ్ళకి మేము హెల్ప్ చేస్తా ఉన్నాం. ఏ టైంలో కానీ క్యాష్ ఇవ్వడం, క్యాష్ డిపాజిట్ చేసుకోవడం.
The customer service point aims at providing various basic banking services like cash deposits and withdrawals, fund transfers, etc., along with various government schemes to the unbanked.
కస్టమర్స్ బాగా సర్వీస్ ఇస్తాం సార్. 9కి ఓపెన్ చేస్తే నైట్ 8:30 వరకు ఉంటాం సార్. అప్పటి వరకు బాగా చేస్తాం సార్. బ్యాంక్లో పోతే 1 అవర్ 2 అవర్స్ నిలబడుకోవాలి సార్. వాళ్ళు తీసుకోవాలనే కట్టాలనే. అందువల్ల మన దగ్గర అయితే త్వరగా ఇచ్చేస్తాం సార్. బెస్ట్ CSPగా 2019లో ఇచ్చినాను సార్. ఏపీ బాగా చేస్తున్నాం అనేసి ఇచ్చినారు సార్. 2019లో ఇచ్చినారు సార్.
TMSBYలో ఎంటైర్ స్టేట్ ఫస్ట్ ఏపీవైలో సెకండ్ ప్లేస్.
We at SubK constantly aim at making India a financially inclusive country, for which we have partnered with various trustworthy banks and appointed agents on their behalf and will continue to do so. As we pass through the bustling streets of Anantapur in Andhra Pradesh, we come across a busy marketplace where many small businesses are starting their day.
నా పేరు సురేష్ కుమార్ రెడ్డి. నాది ఓన్ సేల్స్ అండ్ సర్వీస్ మొబైల్ పాయింట్ ఇది. ఇంతకుముందు ఓన్లీ సర్వీస్ చేసేవాడే, చిన్న చిన్న అంటే సేల్స్ చేసేవాడిని. ఇప్పుడు ఏమంటే సబ్కే వాళ్ళ టీం వాళ్ళ ప్రొసీడ్ అయిన వల్ల లోన్ తీసుకోవడం వల్ల నేను అంటే సేల్స్ సర్వీస్ కూడా కొద్దిగా స్టాక్ తెచ్చుకోవడం జరిగింది. కొద్దిగా ఇంప్రూవ్మెంట్ అయింది షాప్.
Micro, small, and medium enterprises are the engines of economic growth and equitable development in the country. And SubK ventured into MSME, lending to provide quick, easy, affordable, and dignified access to much needed credit to such entrepreneurs.
సో బయట మేము ట్రై చేసినప్పుడు అక్కడ ఏమైందంటే కొద్దిగా లేట్ ప్రాసెస్, వాడు అవి తీసుకొని రా, డాక్యుమెంటేషన్ తీసుకోవడము, మీకు సరిపోవట్లేదు, మీకు ఇంకా అప్లికేషన్ ఇంకా మూవ్ అవ్వలేదు, లేట్ అవుతుంది, టైం చాలా పడుతుంది, అది ఇది చెప్పడము. అదే కులాబ్ సార్ ద్వారా మేము ప్రొసీడ్ అవుతాం. సబ్కి ఏంటి వచ్చారు కులాబ్ సార్ వచ్చిన తర్వాత మాకు అది ఏదైనా ప్రాసెస్ అంతా అడిగితే కొద్దిగా ఫాస్ట్ మూమెంట్ తీసుకెళ్లారు. అంటే ఇంకోటి ఏమంటే మీకు అక్కడికి ఇక్కడికి ఇంట్రెస్ట్ రేట్ వచ్చేసి ఇది చాలా తక్కువ ఉంది. లోన్ తీసుకున్న తర్వాత చిన్న చిన్న మొబైల్స్ పెట్టాను, ఇయర్ ఫోన్స్, చార్జర్స్, బ్లూటూత్ స్పీకర్స్, బేసిక్ మొబైల్స్, టోటల్ కేబుల్స్ అన్నీ తీసుకొని వచ్చాను. కొద్దిగా అంటే సేల్ చేసుకోవడానికి కూడా బాగుంది. మనకి కస్టమర్ అడిగింది రిటర్న్ పోకుండా మన దగ్గరే పర్చేజ్ చేసి నెక్స్ట్ కూడా మనకు రిపీట్ అయ్యేలా చేసుకున్నాం మనం.
We at SubK believe in giving wings to the dreams of entrepreneurs and have assisted thousands of business owners such as Surya in improving or expanding their enterprise and will continue to serve them with dignity and respect.
Good evening, everybody. Before we move ahead with the session, there's just an audio visual from Samannati.
Anish, please press pause. We are not able to hear anything.
Check volume.
A very good evening and a warm welcome to all our viewers on Zoom and Facebook Live. We welcome you to the Nagarajan Impact Dialogues of Basic Sabke Samvad. We facilitate conversations with social sector innovators, influencers, and integrators. This track is our tribute to late Mr. V. Nagarajan, founding advisor and auditor of the Basic Social Enterprise Group, a stellar personality who has left behind a legacy on the social sector. Thank you very much for taking out time and joining us for what is surely going to be a stimulating and engaging session. Today's session will be a very freewheeling chat about breaking barriers in agri-finance with Mr. Anil Kumar, founder and CEO of Samannati Intermediation and Financial Services Limited. We will be hosting a question answer session towards the end for about 10 to 15 minutes. Would request our viewers to post their questions in the chat box in both Zoom and Facebook. Without further ado, I would like to call upon Sasidhar sir, CEO and MD of Sabke Impact Solutions, our moderator for today's session. Over to you, sir.
Thank you, Anish, and warm welcome to everyone. Thank you for joining on a Friday evening. This is going to be, let me assure you, a very scintillating session with Anil here sitting with us. And before I start, let me just add to what Anish mentioned about this track that we're running, Nagarajan Impact Track. Incidentally, it has been exactly 1 year that we lost the legend, Mr. V. Nagarajan. In fact, yesterday we had a memorial meeting among some of us, remembering his contributions to the sector. I think it's very befitting to talk to some of the luminaries in development sector, which Mr. Nagarajan has also been a part of building this, the whole structure that we see today. He has been instrumental in bringing corporate class governance and compliance standards to what we call today social sector. And many of us enjoy the benefits of his sharp acumen and his passion for impact. It's, of course, indeed a pleasure and an honor to host this session and introduce our guest today. Anil Kumar, as you all know, is a founder and CEO of Sammunnati. Established in November 2014, Sammunnati as an organization has been offering financial, co-financial and non-financial solutions to marginal, small and medium holders, including farmers, agri enterprises, and wholesale and retailers, wholesalers and retailers. For overseas participants, Sammunnati stands for collective growth, collective prosperity, collective elevation. Since past 5 years, the company has been focusing exclusively on agri and agri-allied activities and has its presence in more than 54 value chains spread across 19 states. Sammunnati today works with 500 farmer producer organizations that are collectively serving about 4 million predominantly smallholder farmers across India. Anil is a career banker with over 28 years of experience in the areas of rural, retail and agri banking. He started his career with Canara Bank and then joined ICICI Bank. Over last decade, Anil's work was focused on creating newer institutions across the country and operating in financially excluded markets with corresponding support structures for the capacity building. Anil was the co-founder and trustee of IFMR Trust and the CEO of IFMR Rural Channels since that last 10 years. From educational background, Anil holds Masters in Management from Asian Institute of Management, Manila. He also holds MBA from Symbiosis Institute of Management and has a graduate degree in Humanities from Osmania University, Hyderabad. Anil, it's indeed an honor to be with you today, and thanks for accepting our invitation. So before we begin or dive deeper into the specific aspects of what you do in Sammunnati, maybe it will be useful for the audience to know why did you start Sammunnati, where this whole story started from, why Agrifinance, and what's the story behind it?
Good evening, everyone, and thank you, Sasidhar, for giving me an opportunity to share Sammunnati's story and Sammunnati's journey with all of you who have joined online, and most importantly with the fraternity of basics. I always say that whatever we are doing now in the agri space, or in rather financial inclusion space, I have not come across a single pilot or a model that basics has not thought through or has not done so far in their wonderful years. So it's an honor to be part of this conversation, as well as being with the people behind basics at this point in time. But otherwise, deep respects for the founding members of basics, as well as Mr. Mahajan, Mr. Ramana, a host of others. We have Ramaji, Shankar Datta, so on and so forth. You have asked me two questions. One, where did this idea of Sammunnati germinate, and why agri-finance? Both have two different connotations, Shashidhar. One, agri-finance was something that came along my banking career, so to say, because my journey into banking started in a rural branch of Canara Bank way back in 1991 in a small village near Kurnool in Andhra Pradesh. I got exposed to banking. Rather, my baptism into banking was in the remote parts of rural Andhra Pradesh, and I could firsthand understand two dimensions. One, the life of a rural household with predominant dependence on agriculture, and two, the importance that financial services play in their lives if productively structured. And most importantly, I also realized how a single person with passion can make a difference if that person happens to be the branch manager of the concerned branch, so on and so forth. So the journey in banking started in the agri-finance, so to say, because if you are in a rural branch, you predominantly do agriculture, you don't do anything else. Then my career took me to Hyderabad, and also to the new age banking at ICICI Bank, where in 2001 I was posted as branch manager of ICICI Bank Guntur, where agriculture came back into my life, because that branch of Bank of Madura at that point in time, which got merged into ICICI Bank, was predominantly in agriculture lending, but on the post-harvest side. And all of us know Guntur is a hot market for chilies, tobacco, and turmeric. So I got exposed to these three commodities and how the post-harvest dimension happens from a banker's lens. And at that point in time, I had no clue that I would be getting into financial inclusion and the excluded markets. I was still a branch manager running the retail portfolio. But then in 2005, when I came back to India after my master's from Asian Institute of Management, I joined the corporate office of ICICI Bank at Bombay, and was given the responsibility of setting up microfinance institution development team with focus on bringing newer models and newer channels into the microfinance space with focus on institution development. It was a development team within the commercial group. And after 2 years of that, couple of us who were actually working on that were deputed to Chennai to set up IFMR Trust. And within IFMR Trust, I was given the responsibility of setting up the local financial institution model called KGFS. By design, the KGFS model has two dimensions. One, it was built to be a full service model with rural remote as the focus. What it meant is the channel is a branch. The target audience are all the households, rich, poor, men, women, farmers, landless, laborers, all of them. And the branch was supposed to provide all the services that cuts across the credit, insurance, investments, and remittance products. How do we bring in a structure, a format in which you understand the household, bring in the products that are most relevant for the households, and be able to offer those products through the wealth managers that we used to call the branch officials in the local language, in the local context, is what KGFS was all about. Really privileged to be part of that engagement, because it gave all of us who are part of that that era, so to say, gave us a good understanding of the dynamics of the remote rural households and how financial services play such a vital role in not only their current reality, but also in shaping their future aspirations. So the structure that we had in KGFS was a deep understanding of the assets, liabilities, income, expenditure of the household as one dimension. And the second dimension was mapping the aspirations. What are your financial goals? What is your plan for your two young children at home? What is your plan for the thatched house that you have? What is your plan for the small tea shop that you have? So on and so forth. Perhaps that was the first time that most of these households had someone coming and asking them about their aspirations. What do you want to do? So it was usually a free-flowing conversation, and we started understanding how, in addition to credit, we can also bring about how much of insurance is relevant for this household, so that the loss of an earning member of the household gets compensated at least financially, if not emotionally, to these people in terms of the aspirations that they are pursuing. So 7.5 years of being there, setting up about 6 such KGFSs with a wonderful set of about 1,100 people in remote rural parts of not only Tamil Nadu, but also Orissa and the hills of Uttarakhand in the Gadwal hills. Thought that there is something else that needs to be done because of 2 reasons. One, the deep understanding of the household is very important, critical. We started realizing that these households are not operating in vacuum. They are operating in an ecosystem, and this ecosystem is dependent on 2 or 3 major economic activities. And because these are remote rural households, these major economic activities willy-nilly would mean 2 or 3 major crops, major agri-value chains. So whatever happens in these major agri-value chains, whether the household is directly engaged in that activity or not, has had an impact when we started interacting with them on the cash flows of the household, whether they are directly engaged in that or not. For example, if there is a bumper crop in that area of a particular commodity that they are growing, the spending pattern of the villagers would change, and the small kirana shop owner in that geography would see the benefit of sales going up, and the reverse is also true. So that's when the idea of Sammunnati germinated, saying, can we go 1 or 2 levels above these particular value chains, and can we plug the possible weak links so as to protect the smallholder farmer or the remote rural household from the vulnerabilities that they are exposed to, is how Sammunnati as an idea germinated, Shashi. So that's how these 2 dimensions, why agri-finance and how Sammunnati came into existence.
Fantastic. So basically you're bringing your lifetime learning of both banking and the rural practice that you have been exposed to. So I think that is coming together in the form of this institutional architecture that you created. But as a founder of a so-called startup, no, I can't even call Sammunnati startup. You're big beyond being called that, but given your age, right? There is always this called Josh or whatever, that we're all sort of trying to solve a big problem and come up with a set of assumptions, right? So from our learnings and obviously deep learnings, but it's not always that all that translates into reality when we start doing things on the ground. So can you educate us on what worked and what are they, or what did not work, and what corrections you ended up making on the process? It will be a good learning opportunity for other probably to be entrepreneurs here.
Sure. First and foremost, I will share what worked as an individual, and then I will get into what worked as a company. What worked as an individual, Sasidhar, is the goodwill and social capital that got generated over decades of working with wonderful people and staying connected with them and constantly learning. Sammunnati as a startup happened accidentally. I never envisaged that I would be an entrepreneur. I never envisaged that there will be a company that we would be setting up. And we don't know where the inner strength and confidence came in. I can add many words to the decision that was taken, but the fact of the matter is, when the decision was taken, it was an emotion rather than an articulated word that let me give it a try. And I must thank my family members, because our lifestyle even today is 20,000 rupees a month lifestyle. It doesn't change. So my wife said, getting this 20,000 a month is not a problem. So pursue your passion. Don't worry about it. And you would do well. Couple of friends who I reached out to, they said, we are there to support you. Don't worry. And one of them indeed said, even if you fail, you can sit in my office for 6 months and I will pay you whatever was your last drawn salary. So go ahead and do it. Thanks to IFMR Trust, they also said, you don't worry, we will incubate you if required. Right? So if I look back, the kind of support that wonderful people gave to the idea of going solo is nothing but a blessing that one can have. So I keep telling most of the youngsters, I agree I'm still young, but I still keep telling most of the youngsters that the one capital that one needs to build is a social capital. Whether it is the lady in the village as part of a group who borrows from a microfinance institution, or a youngster who is looking at building a career, whether in the corporate world or on his own or on her own, social capital is extremely important, because we are human beings and decisions get taken by human beings for human beings. Sammunnati started by taking a loan on my house in Hyderabad and my provident fund money from IFMR. These are the two capitals that came. Then we wanted to do incrementally different than what KGFS was doing at that point in time, because the idea was to build above that wonderful work we had all been part of as part of IFMR. Why reinvent the wheel? The whole idea was, can we showcase something meaningful as a full service model for KGFS? So we picked up a district which was again not a KGFS area, Tiruvannamalai, and dairy was an important activity. So we thought we will do dairy as an activity. And I must acknowledge the support that I got from Microsave during this period, because I was a 2-member team at that point in time, and Microsave sent a set of about 4 people from Lucknow all the way to Tiruvannamalai to do the value chain mapping of both dairy and a couple of other value chains that were indeed in vogue in Tiruvannamalai, to look at what are the ways in which we can look at building a value chain finance proposition. So we started with dairy as a value chain. We thought, if you are looking at about 4,000 people per branch at some point in time, can we look at villages with about 25 to 30,000 population? Because at that point in time, KGFS was looking at villages with less than 10,000 population, because that model entailed serving everyone, rich, poor, men, women, farmers, landless, laborers. But here we are looking at people who are engaged in livestock as an activity, engaged in dairy as an activity. So we thought even 25% of the people are engaged in that, it will be a threshold volume reasonably good enough for us to be able to do it. Is how the dairy as a value chain came in. And what we started realizing is the role that the aggregators were one second, is the audio okay? Is there a disturbance?
There is some disturbance that's coming in. I don't know whether it's coming from you or
Sir, I think it's whenever you're touching the laptop or whichever device you're using. I think that's
possible. No, I am indeed holding the laptop, because I just got a message that there is. Is this okay now?
Yes.
Is this okay? No disturbance, right?
No.
Okay. Okay. Thank you very much. I'm sorry about this. I didn't know I still have some electricity left in the body. Okay, sorry about that. So I was saying that we looked at dairy as an activity, and we started realizing that when you take a value chain, there are 2 dimensions of a value chain. One is the dimension of the buyer-seller relationship, and second is the dimension of aligning the incentives. That's our starting point of how the Sammunnati model got built on the non-traditional underwriting that we started articulating. Sasidhar, I must confess that most of the words and jargon that I am using are being coined post facto. We started doing things on the ground, and now the words are coming for the activity. So it has been that organic learning. So let me not sound...
That's how jargons get created. So Yeah.
No, I don't want to sound too insightful. We started working on the ground. Let me put it that way. Okay. So we started understanding the dynamics between the producers and the intermediaries, the dynamics between intermediaries and processors, so on and so forth. And we looked at there are two capitals that are critical when one looks at engaging value chain approach. The first capital is the soft information, the familiarity, the non-financial information that you can pick up by virtue of interacting with the markets or with people who are engaged in that activity over a sustained period of time, which is what microfinance is all about. The social capital, the soft information. So social capital is one. But this social capital in the context of value chain approach is not getting created because we live together, because we are in the neighborhood, but it is getting created in the context of we engaging in a transaction. Somebody is buying, somebody is selling, and there is an interaction. And this transaction history is also getting recorded somewhere in various forms and shapes. It could be informal chitti, it could be a small book, and so on and so forth. So when people call information asymmetry, all that it means is the lens that I'm using is not capturing the information. It doesn't mean there is no information. Information is available. We have to change the lens. So we started looking at how do we change the lens to understand this information that is getting created. And that is the second capital called trade capital. Now, when you ask an aggregator about a rural household which is engaged in dairy as an activity, invariably we used to get the answer that, oh, that household, they have been pouring milk for the last 15 years. I have been collecting on an average about 5 liters a day. You see, you not only get the social capital, that the vintage of relationship is 15, but also trade capital, which is 5 liters a day is 25 rupees, is 125 rupees a day into 30 days. You can then look at structuring. So we started understanding that whom to lend is social capital, how much to lend is trade capital. Now, how is this both to be mitigated as a risk? And what is the role that this guy who has both these capitals as his capital to be incentivized, and what is his role or what is her role if it is an aggregator? So we started understanding that this aggregator is not just aggregating or collating the produce and supplying, but the aggregator is also the market maker for the rural household, is also the price stabilizer, because he will not pass on the volatility of the price within the band to the rural households. And most importantly, he is also lender of last resort. If there is a cow that the regular supplier, this 15-year-old household, is say looking at purchasing a new cow, this person invariably would invest about 5,000 rupees as his equity for the asset that is getting created. Why? Because he will also get the income from that, and so on and so forth, and the deduction happens. So we thought, if we understand the incentive of this person, which is, he's not the producer, he's not the consumer, he is the person who is, I'm using he because most of the aggregators are male, so please bear with me on the gender. So this person is collecting this with the purpose of making a revenue on the volume. So the aggregator's incentive is more income. More income is value into volume. Value is determined by the market. Volume is the only one that he has control on, she has a control on. And how do you increase the volume? By investing in the asset, which he is doing. And most of these aggregators do this, and their ability to collect milk on a daily basis is directly proportional to the number of cows that they would have invested in through the families. Then we started looking at, hey, how do we increase the number of liters of milk? He said, more cows. And how do we know whom to lend? And he said, I will recommend these people to you. You lend only to them. I collect the additional milk. I give the guarantee. Anyhow, I make the payment. I will deduct the payment and give it to you. That's where the deduction at source came in as a risk mitigation for us. And then we started understanding that this principle remains the same whether the aggregator is an individual or aggregator is a farmer collective, a society, or a corporate. The principle remains the same. Social capital, trade capital, incentives of the aggregator aligned to increase the volume. That's when we started looking at, hey, why not go to the collectives and FPOs? Because other than the peninsula of this country, the belly, the central India and up, Most of these aggregators are Doodh Utpadak Sanghs. They are societies. Same activity, but being done by a community-based organization, larger in number. Each of these societies had 150 people, 200 people, 500 people. Of course, we all have the hallmark of the society, which is Amul, as the epitome of what cooperatives are. But let's come back to regular, normal cooperatives. So we started realizing that the social capital, trade capital, and the deduction at source is something that we can bring in to have a non-linear mode of engaging in a value chain proposition. That's how we started working on the model. How did we expand to other states? Was also organic. One of our impact metrics was how do we reduce the cost of inputs. And in dairy, the input is animal feed. More than 60% is spent on taking care of the animal. And the basic ingredient for animal feed was maize and de-oiled cake of soya. So we had to chase where maize is being produced and where soya is produced, and that led us to Madhya Pradesh from Tamil Nadu. And then we followed because the animal feed industry was not just for bovine animals, but it was also for fisheries and poultry. So this is how organically we started moving. But the principle of leveraging social capital, trade capital with aligning the incentive stayed put with us. So I stop here.
Incredible the depth that you've gone into to, I think, make us understand, especially those who are not so much into this space. I think you made it so simple, and it's also incredible that I do recall my early days in basics when we were trying the aggregator models, and of course haven't been very, very successful, I would say, because of the time, maybe a bit ahead of time in trying out those models. And I'm so glad to see that some of those ideas are really coming to life, and people like you are internalizing and making it really happen. Very, very intriguing.
That's how I started, with the caveat that we are not doing anything original.
No, it's not about that. It's doing it right and doing it successfully is critical. But you talked about leveraging social capital, leveraging the whole value chain efficiencies. Let's talk about leveraging technology, right? So that's I don't think today we can manage anything without, or it's not fair to do it anything in scale without leveraging technology, right? So, but the challenge in the space that you are in, although you said information is available and information is available in various places, I don't know whether that data is in a form that you can in fact analyze and do your risk assessments. And that's one of the big reasons why a lot of lenders have shied away from this space, because they have no visibility of what is happening because of lack of data in the right form. So how did you resolve that, and how are you leveraging technology to answer some of these problem statements?
Right. We had two-dimensional approach to this, Sasidhar. One is we started investing in developing a deep domain expertise in each of the value chains that we entered and we had envisaged to operate in. So we started recruiting people, not just bankers who know how to underwrite, but also people who are from the other side of the world, in terms of people who are non-bankers but understand the nuances, the dynamics of how these economic activities happen, how the software information gets exchanged, how the informal structures work, so on and so forth. Because it's not that these activities are not happening, excepting that they are not happening in the way the formal world understands it. But otherwise, everybody is doing that activity. Agriculture lending is happening, excepting that a portion of it is coming from formal sources, but a large portion of it is coming from informal sources. All farmers don't own land, but all those who do farming are doing farming, and all of them are not investing cash. So there is credit. So the important thing for us is, how do we understand these informal structures that exist in each of the value chains? And we started getting people from domain expertise into Sammunnati. And what it also entailed is, we started realizing that while finance is important, it is not sufficient. Finance at the most is a means, not an end. There are much more things that need to be done or needed to be attended to if the aspiration is to make markets work for smallholder farmers, if the aspiration is a meaningful value chain provider. That aspiration is an important dimension. If you want to be a lender, being a lender and being a traditional underwriting entity is good enough. But if the aspiration is no, I don't want to be just a lender but do something else, then we have to invest in domain expertise. Then we started understanding that there are multiple ways in which you can triangulate the information. In the dairy example, again, if I may go back to that, right, the dairy example, you have the milk statement, you have the informal ways of maintaining the record, which is individual customer. Milk statement is an aggregated statement. Credit into the bank account is the amount that goes from the milk statement. So you have the ability to triangulate all these three, and hence the role of the aggregator in helping this triangulation was critical for us. So the model is a B2B2C model. We don't directly engage with individual farmers. The middle B is important. That middle B in the context of farmer collectives is the FPO. In the context of processors is an aggregator. In the context of agri enterprises could be a large retailer, right? But that middle B is an important dimension for us. And it is that middle B which connects these two worlds. One world that has information in an informal fashion, the other world that has information in a way where formal financial institutions would be able to read and underwrite. So we brought in that. Second dimension that we also saw is because we were not looking at branch-based approach, we didn't want to have cash in the system. So we went cashless and paperless from day one. And it was purely from the OPEX perspective, and that played a significant role when Demon happened. We continued with our operations in spite of the cash not being there, because at that point in time nobody envisaged that something like that would happen. But the process of not having cash has been there as part of Sammunnati's model from day one. Why? Because the transactions indeed are happening, and I was watching the videos that you were showing just before the start of the of this session. These are the interventions. Thankfully, technology and entities like yours have already brought in banking, and I have not come across a farmer who does not have a bank account now. Whether credits are going to the bank account or not is a different story between the aggregator and the farmer. I'm not saying all the credits are going into the bank account, but at an aggregator level, there is banking. It's not cash economy anymore from aggregator onwards. So you can build in the mitigation at an aggregator level and take the aggregator into confidence. And the only way to do that is through the alignment of incentives. Is the aggregator important in the product structuring? And what makes him to participate in the product structuring? Align the incentives. And it is there in the name of the organization. Sammunnati, Sabka Unnati, collective growth, collective prosperity, collective elevation. That word collective is an important dimension. That's why we say we don't believe in disintermediation, because intermediaries are there for a reason. They have a role to play. The moment you disintermediate, then you have an adversary in the local market already. There is so much to do together.
Yeah, well, it's interesting because a lot of, I would say, myth around the role of intermediaries and how they sort of distort markets and corner the benefits. But I think what you're saying makes sense, that if incentives are aligned and if you identify the right players, maybe institutional structures today are even more reliable, like FPOs and other collectives. But even at the individual or a corporate level, today the possibilities of aligning interests and can be. I mean, that's probably what you're exploring, and I think it's fantastic. So that leads me to the question about. Sorry, Anil, you are going to add something.
And we saw that in action within a year of our engagement in the dairy value chain in Tiruvannamalai. What we saw is once we started giving cattle loans through the aggregators, their procurement went up to 1,000 liters a day. And usually they make about 1 rupee, 50 paise per liter. What they did is, because now they have to procure 1,000 liters, instead of 1 rupee 50 paise on 1,000, they started giving 50 paise back to the farmer, so that the metric became 1,000 liters and not 1 rupee 50 paise.
Absolutely. I think volumes matter that way. So that leads me to this point that I know that Sammunnati is not just a lender. I mean, of course, your core business is lending, but I think you are quite actively promoting the ecosystem way of doing things. And I know that there's a lot of effort taking place in building the institutional structures, or if it is. So can you talk a bit about why you're doing, I mean, what exactly you're doing in that space, and why as a lender you are doing this? What is the payoff here? I mean, I don't see lenders actually getting into non-lending side of business, and there's very kind of narrow focus. But here you're not taking a narrow approach. So
right. So in my view, Sasidhar, there are three kinds of startups. One category of startup is an entity that comes into existence in a market where the models are proven, the entities are successful, and come with the driver of efficiencies. I can do the same thing more efficiently, less cheaper, better, and more value add. It is delta. For example, if there is a new urban microfinance institution that comes up in Hyderabad, for example, the context in which they put their proposition is, I can do all of this that you are looking, but I can also do 1, 2, 3, 4, 5 more in an efficient manner. Driver being efficiency. The other end of the spectrum of a startup or a new entity coming up is greenfield. The Googles, the Facebooks, the Ubers, the Swiggys, the Olas, where you see a fantastic idea picked up when you had no clue that that was a latent need, and some guys have the ability to not only pick up the idea but also execute at scale and alter the way we live. That's the other end of the spectrum. There is a third dimension where everybody knows there is potential. Everybody knows something needs to be done. Everybody knows that others have tested, tried, failed, and somebody has to bell the cat. Agriculture for me represents this dimension. So a lot that we do, first and foremost, we check, has someone tried it? Has, what have been the learnings from the past? If we have to pick up learning from what happened in this particular segment. And one biggest learning has been, if you are a lender and you are not an internal player in the value chain, you are susceptible to risk. Because I always mention 99.99% human beings are honest and credit-worthy people. The people who have, agar niyat kharab hai, they have a bad intention, and you provide for it. The defaults that happen are either circumstantial or situational. And as a lender, you have to understand what are the risks that your customer is exposed to, and how do you mitigate those risks as your own risk management philosophy so that those risks don't become your risks. And that is where the internal player in the value chain becomes a need, a necessity for the third bucket, the bucket that I am referring to. And that is what led us to look at which are the entities that can help us understand the risks and build capacity. And in the last 4-5 years of our engagement, we have worked with about 35 startups, and we have lent about 100 crores and market linkages of about 100 crores, together being 100 crores with them. So in a way, a startup working with other startups. And on 15th of August, this Independence Day, we also have made that into a platform called Samaram, in which the startups can actually enroll themselves with 3 expectations. One expectation is working capital for them if required, because equity you will get. The environment outside to get equity into agtech and startups in agriculture is fairly enabled now. It's the hot subject. But then that is one form of resources that you have. You also need debt, you also need working capital, you also need other things in the financial instrument. So one is, can we provide working capital to them if they require? Second one is access to markets. If they have a solar pump, they may require 1 or 2 FPOs which say, hey, I am ready to test out. Or we asking the FPOs, hey, there is this new proposition that is coming up, can you test it out for us? And the third dimension is, in order to test that out, and if say 10 people have tested out and 2 of them are interested to buy, but they don't have money, is there a financing structure that we can bring about to do that? Is why collaborating with the ecosystem players becomes important and Samaram becomes relevant. The other dimension is a lot of perception about agriculture is also from the dimension that agriculture is equated to crop loans. Crop loans are equated to cultivation. Of course, yes, crop loans are given to cultivate, but agriculture is a sector. Crop loan is one sliver of agriculture. There is so much that happens before cultivation, so much that happens after cultivation. Within cultivation, you have three phases. Phase one is preparing the land and sowing the seed. And if something happens, you can always do that again. All that you lose is time and the cost of seeds. The vegetative period is where most of your risk is. And when it is about to be harvested, you have a salvage value. Kuch to mil jayega, you will get something. That middle phase is where you are most vulnerable. And if it is a short-term crop, that window is too short a window. And post-harvest, you have 48 tons or 28 quintals, you have as many quintals. Rain guard has no role to play once you have harvested, as long as you have the ability to store it. So bringing this perception or addressing the perception and bringing some awareness about agriculture and the perceived risk was also an important dimension. And some of the agtech companies and startups are trying to do that. Bringing them into the context of a business was also important for Sammunnati, because the lenders to Sammunnati would also want to understand how risk is mitigated. So in my view, there are three buckets of technology that three kinds of constituents use. First is a technology that is used by the farmers, where there is a tangible outcome to their incomes. And you see that happening, whether it's usage of tractor or a harvester, or, again, I keep mentioning this time and again, artificial insemination in dairy. They know that if you impregnate a cow through a paravet having an artificial insemination process, you will get milk and you get money. And hence they are ready to pay that 150 rupees that is required for that activity, and also take care of the paravet when he comes to the village and their house. Direct correlation, positive correlation between expenditure and income. The second part of technology is intermediaries like FPOs or cooperatives, which are incentivized to serve their members. What kind of technology helps them serve more numbers? That is where the FPO digitization comes into picture. More numbers, more services, more volume, more relevance. Second bucket. The third bucket is entities that are interested in reaching out to farmers as well as the members, but have shied away because they don't understand, they don't have access, or there is a perceived risk, would want to look at two things. One, do I have monitoring capability of these people, real time, online? That is where the satellite imagery and insurance and all those things come in. And two, is there a way to mitigate some of the risks that they are exposed to in a timely manner? Insurance companies, large banks, entities that are interested in agri last mile are all the ones that come in the third category. So if you segregate each of the startups again or agri technology companies, you will invariably see each of them in these three buckets. But then all of them are focused on the farmer. Now you cannot expect the farmer to be paying a 5 rupee here, a 10 rupee here, a 15 rupee here. He is interested in a combined one. And an entity like Sammunnati, which is more like an integrator, because we also provide market linkages and lending, is better equipped to bundle such products so that the 10 rupees that needs to be paid for an insurance, which actually mitigates our risk, need not be taken as a premium from them. We will absorb that cost so that that activity gets mitigated, because in a way, my own money is safe. So on and so forth. So again, Sammunnati, it's a symbiotic relationship. With the startup ecosystem, symbiotic relationship for our growth and their growth.
Very, very interesting. So it's basically taking a very comprehensive sort of a 360 degree view of the whole business of agriculture and intervening at the right places and taking everybody along. I think it's a very sustainable way of doing things, and there is a risk management aspect also, like you said, involved there. But then tell me, what is that we should expect here in terms of more Sammunnatis, right? Today when people talk about agri-finance, Sammunnati is sort of a synonym. You really took this space by storm, right? But now, what is it that you think? Are we playing a role of some leader leading the way in some sense, so that more such, and we definitely need a lot more Sammunnatis, right, to solve the problem. And you also need to have a fraternity in your space, right? So, do you see any such thing happening around you?
We would be very happy. In fact, I would certainly wish that there are at least 100 Sammunnatis within the Indian landscape, given the humongous unmet potential that agriculture represents. And majority of my time goes in sharing what we do. Everything is in the public domain, whether it is guarantee structures, whether it is product structures, there is no secret sauce. And I don't believe that in finance there is IP. All that you get is perhaps few days of first mover advantage. After that, if somebody is smart enough, they will pick up the next moment. It boils down to execution, and execution boils down to the passion. Everyone who understands how to do business cannot do unless they believe in it. So if you are able to inculcate that passion in the youngsters, is when many Sammunnatis can come up. Of late, we are going to all agri campuses to recruit people. And we are also, we have just started Sammunnati Foundation as well. One of the aspirations and one of the projects that Sammunnati Foundation will be looking at is create a fellowship structure, create local entrepreneur structure, and create a leadership cadre for FPOs in the local geographies. Imagine a COO, CEO of a FPO in a remote place is aspirational for many people. And if that person comes from the local language MBA, it's a nice structure for them.
Yeah, absolutely. We should hope that more agripreneurs emerge out of Sammunnati's sort of ecosystem. I think that would be a big contribution. I think you would make more than even capital in that sense, because there's a multiplier effect there. I think there are some questions that are coming up, and also something that is very burning topic today are farm bills, right? So, keeping the politics aside, how does it? How do you see this change in the legislation is going to help or hurt the business that you are in?
It does not hurt, first and foremost. And all these requirements, for some of us who have been part of this ecosystem, they have been there as requirements long enough. Everybody knew these were important steps to be taken, accepting that the pandemic moved these from important bucket to the urgent bucket. Sooner than later, this could have got addressed in the future. I don't know whether near or far, but it required a pandemic to move them. And if you see each of these, they are not taking away what the current reality is, but are bringing enablers to make agriculture as an activity happen in the current context. So let us just take mandis. Trade can still happen in mandi, excepting that in addition to mandis, you can also do in other places, is what the bill says. And mandis were indeed very relevant in the context of when technology and platform and other things were not there. So you require a physical aggregation of the buyers and sellers coming together and transacting, and it was pretty efficient at that point in time. Now that we have the inroads of optic fiber technology, 4G and all of that, there is a possibility of expanding beyond mandis, is how we look at it. Essential commodities, bringing some stability in terms of when the triggers from the policymakers could come in, and defining those triggers brings in a lot of certainty to the decisions that might get taken, so that people cannot say, we don't know what happens overnight. And the ENAM, NERL and all those things are all taking the aggregation and the power of FPOs to be the smaller mandis or smaller processing zones to a next level, because you can always aggregate them using technology. Imagine a FPO with a input shop. I will share our own example, or FPO with also a small warehouse in their in their premises. And each of these warehouses are all connected through IoT devices and into a platform. And you and I sitting in Hyderabad or Chennai require, say, 10 metric tons of, say, maize. And at a place, we can go to that platform and say, hey, which are those 2-3 FPOs which can supply maize to these nearest places without having to aggregate physically, then disaggregate again based on the demand. You can bring in a lot of efficiencies in the logistics. We work with eFresh, another entity in your own city, Hyderabad, in creating what are called farmer development centers. All these farmer development centers are real-time online video enabled. And we have 30 such FDCs in 30 FPOs that we have. 16 of them got added on 26th of October last week. Sitting here in Chennai office, all those 30 shops are available on the screen, and we know who is walking in, who is walking out, and having the ability to interact and look at our own, our own sessions, the number of sessions that you have been able to do thanks to the technology. That takes away a lot of the physical aggregation, and that's where these bills will take agriculture and market linkages too, is how we are looking at the Uberization, if I may use most often used cliche, the Uberization of agriculture. But I would say the role of FPOs become much more relevant, and the potential of FPOs to play that role increases manifold. What it means is you and I, people like us who are part of this sector, have much more responsibility to convert this potential to a reality. So it adds responsibility to us.
I think very nicely put. I think that's a good summary of how this new developments could be leveraged. Thank you for giving us that clarity. Let me unmute one of our friends who has a question on the policy front. Amit from World Bank is here and he wants to ask a question. I'm unmuting Amit. Amit, you can come on the video if you like, and please unmute yourself. I'm just giving you the. Yeah.
Thank you, Sashi, and hi, Anil.
Hey, Amit.
Good to see you here. And I'm also glad to know that one of our projects have signed an MOU with Sammunnati in Odisha recently. So look forward again to work with you.
Absolutely. Looking forward to Amit.
Pleasure mine, like always. And quick question, Anil. For selfish reasons, I'm taking you away from the ground. Based on your experience, what is it that that you think regulator or policy makers should do to encourage more and more lenders, probably non-bank lenders or lenders who don't do agri lending only for priority sector compliance, so that more players come into the picture, and also the cost to the borrower by virtue of lower cost to the lender goes down or improves. So your take on that. Thank you.
Thank you, Amit. Thanks for the question, and thanks for all the support over more than a decade. So one of the things I was articulating is good friends that you have, and you are one of them.
Always a pleasure.
Yes. Okay. So I somehow believe, Amit, that to do something meaningful at this point in time, there is nothing that is required in regulation for any of the entities at this point in time. And I don't know how many people know Telugu. One old Telugu song that I really love and practice in my life is ఎవరో వస్తారని ఏదో చేస్తారని ఎదురు చూసి మోసపోకుమా నిజం తెలిసి నిద్రపోకుమా, which means don't expect somebody coming and changing something and that your life will be better, and once you know this reality, don't sleep. In other words, English is much more simpler. God helps those who help themselves. This is the sum and substance of that entire song. Coming back, the priority sector guidelines are already there. The small and marginal farmer guidelines are already there, and RBI has been very proactive. The small and marginal farmer, now the percentage has gone up by 2%. Now the FPO lending is also priority sector. Loans less than 10 lakhs as part of agri enterprises and MSME are priority sector. How much more can RBI keep on making concessions for agriculture to happen? And the only way it can happen is if few entities demonstrate the agriculture as a lendable proposition and FPOs as an asset class. And thankfully, we have a wonderful partnership coming in with one of the large players are coming in. It has been there for last 2 years from one of the large, multilateral entity in establishing FPO as an asset class. Can we create a common language? Can we create a grading and rating structure? Can we bring in more lenders to it? And few of us who have had the privilege of playing this role in the microfinance not long ago, can we play that role? Sasidhar is from that era where microfinance was also not understood by bankers. Nobody used to do anything. ICICI Bank took the lead, and many other banks also joined that movement. And now it is 200,000. It's a sector. You have a separate category of NBFC called NBFC MFI. You are part of that era. So there is a lot that already exists. Cost, I agree with you, and there are multiple ways. Sammunnati's cost of borrowing. The first loan that we borrowed, that was in March 2016, was at 19.5%. Our borrowing, and it had other things also. It had hypothecation of book debts over 100% plus cash collateral. You add all of that, it was 21.5. With the same lender at this point in time, we have a large amount and at around 12%. You make that journey, right? And Sammunnati is also considered to be expensive for FPOs, which is not true anymore, because since August 2018, we aligned it with other lenders. We lend at around 14%. And my own aspiration is, if a FPO does a good job, and this is a bold statement that I'm making, and I need everybody's wishes to make this into a reality. If the FPO does well with the power of aggregation, forget about rate of interest, they can actually pay dividends. And that is where the culmination of making markets work for smallholder farmers will be a reality, because so far it has been making markets work off smallholder farmers. All of us have to replace that off with for, and we can pay a dividend. Very much possible. I may sound ambitious. I may sound aspirational. Yeah.
Well, that's a bit provocative as well. So, but I think you are speaking the truth from your heart. There is a lot has been done, so it's our part to play an important role here. And you are walking the talk, I'm sure. There is one more question, I think, from one of your gurus, one of my gurus as well. Shankar Datta wants to ask you a question, again a bit macro, in terms of how your work can influence. Yeah, I'm unmuting you, Dr. Datta. Oh, sorry. Yeah. You can unmute yourself now.
Yeah.
Yeah. Please go ahead.
Anil, it was a fantastic discussion on the role that an intermediary plays. Very often, our image of an intermediary is a black hat person who is always just exploiting the poor. That's not correct. I'm very glad that you are recognizing that. And especially your comments about these 3 current amendments, I think they're towards strengthening this class called intermediaries. Now, if we strengthen the intermediaries with this improved technology, improved connectivity, etc., do you think we can actually strengthen the local economy with a lot of money being circulated locally itself instead of going out, and strengthen the capital at the local level? Yeah, I'm through.
Okay. Shankarda, namaste. Good evening to you.
Namaskar.
My aspiration is if FPOs can be those intermediaries, in addition to all layers that we have, would be the aspiration, because there is a lot in the principle of cooperation that this country has demonstrated. The principle of cooperation is ingrained in our fabric, and 10,000 FPOs more are getting added. And the definition of FPO, if you see practically, the cooperatives are also part of FPOs. They are not FPCs alone. FPO is all encompassing, and if we include that, and if we can strengthen that, that portion of the value chain and make them stronger intermediaries, the benefits would naturally percolate. And we have some shining examples of some of the intermediaries that are working. Shankarda, I'm not saying cooperatives from how they are. I'm saying from the principle of collective benefit. That's about it all. If FPOs can play that role, if youngsters can also take up that role, and if we bring in technology for intermediation, absolutely yes. There would be a much larger play. And we are also seeing some of the young MBAs, even the IIM graduates, taking the role of intermediaries and connecting markets with consumers.
Exactly. And I'm saying that, this, we are actually sometimes stuck with an old hat of this cooperative. Why not break out of it? Why not encourage these young professionals and let them do the same aggregation work? Both aggregation of social capital, market trade capital, and information.
Absolutely. And we have
and that's what we need to encourage.
Of technology to do that.
Absolutely. And that's what we need to now encourage.
With you, Shankarda.
Yeah. Great. Thank you, sir. So in interest of time, I just have one last question, Anil. I think people must be wondering on this as well, that we are in the midst of the pandemic. So I think we should address that issue as well, that how did that go for you, the COVID and the aftermath? And what are the plans in future? Maybe you want to put both together in your response.
Right. Again, two dimensions. Dimension number one is COVID in relation to agriculture, COVID in relation to Sammunnati. I would say COVID in relation to agriculture. Agriculture is one of the beneficiaries of this pandemic because it brought in a lot of things that needed to be done for agriculture within focus. Whether it is the supply chains that got more efficient, whether it is the essential commodities in terms of why they are essential, understanding them became much more relevant. And the fact that, of course, we have the 3 farm bills that now are legislations, they're all are bright spots. It also brought in the importance of agriculture as an activity. The reason why all of us could adhere to the lockdown principles and stay indoors is because the neighborhood store, the grocery store that we had all the necessities that we required. And thanks to the local administration and policymakers, that they made sure that those supplies did not dry out. Or else, imagine you and I sitting at home and there is no rice. We will not be sitting at home. We will be on the streets, looking for where do I fetch this. So, it from the perspective of agriculture, it has been an advantage. One of the bright spots, I would say, in addition to healthcare and education. In the context of Sammunnati, the first few days, we also were like, rabbit under the miner's lens. We froze. We don't know what to do. Very fortunately, we were on the brighter side of liquidity. So it was not a question of Sammunnati's survival. Sammunnati had enough runway to take care of all the requirements of our obligations towards our lenders. But that is not the purpose why Sammunnati existed. We existed to take care of our customers, our requirements. So we started internally, discussing what is the best way to engage with the customer, because we know as a lender, when you call the customer, the first expectation and apprehension is, ye paisa puchega. He will ask for the repayment because that is what the nature of the relationship is. The first and foremost, what we did is we told our FPO teams to go as researchers, as people who are interested to know 2 things. One, what are their harvest plans, and what is it that they have today to sell, what is it that they are likely to get as a produce, and within what time frame. In other words, we started aggregating their supplies, their requirements for market linkages. We did the same thing with our agri enterprises. We said, what is it that you require for your processing as raw material, and what is it that you require in the next 3 months, and the tentative timelines. Once we got that, we started doing the matchmaking. And once we started doing the matchmaking is when both sides of the customer started realizing, and of course, the local administration and government played a phenomenal role in making sure that the supply lines of these existed. Interstate movements also were made possible very soon, within few days of the lockdown. Then we did some scrubbing of our data. We realized that 76% of our lending and more than 85% of our market linkages were in essential commodities, and they are essential for a reason. So we then sent this data to all our lenders saying, hey, here is what it is. We are more than 80% in essential commodities. Essential commodities are getting all the support, and it is the entities that are in the essential commodities which are not shut, they are functioning. It is important for us to continue supporting them for their working capital, because Sammunnati is a working capital company. For us to participate in this, in these COVID times, and I'm so fortunate and blessed that all our lenders rose to the occasion when we started getting multiple disbursements during the pandemic. And within the pandemic period, including the September disbursements, we have done about 1,000 crores of disbursements and market linkages, right, for our customers. And now we started acquiring customers only in September, new customers. We could not go to the field to acquire new customers, but we did not starve the existing customers, notwithstanding the fact that we did not take any moratorium. And some of the larger customers whose processing units were shut on account of the lockdown guidelines prepaid money. That also added to our, liquidity. Right. So, and pandemic is the one that established the market linkages platform that we are putting together. We realized that service is much more critical than lending alone. So a working capital company like Sammunnati needs the ability to match the demand versus supply. Again, an example of an internal player in the value chain. So it could not have happened but for the support of all the lenders, and I'm grateful and express my gratitude towards all of them for supporting us.
Right. I think it's also a result of the great work and the trust that you have built also in that ecosystem, right? Even in the difficult times, people are willing to support you. So really, really big thank you, Anil. I think this has been I think nobody could have articulated, this whole story of agri-finance in the form of a Sammunnati story. Sammunnati is just a vehicle, I think, in some sense, that you're trying to solve a bigger problem. And very, very insightful, to some extent, a call of action for, I think, many youngsters to come into this space and join the cause. And well articulated. Thank you so much for taking time and educating all of us about this work you're doing. Incredible.
Yeah, it's my privilege. Again, Basics is a mothership for ideas, a mothership for inspiration for several of us. I never got an opportunity to work for Basics, but I have always learned from Basics and people who are in Basics. So, it's my privilege to be part of, this particular conversation. Thank you for the opportunity, Sasidhar.
Thank you so much, Anil. Over to you, Anish.
Thank you very much, sir, for coming in. Actually, we were so engrossed that I actually forgot that I had some of the work, collating questions here. That was the impact that your session had today. Thank you very much. I think we've taken most of the questions. Shashi sir has enabled all of them.
I think we can, we have exceeded the time, so I don't think
we can come to a close.
Okay.
Thank you all the viewers for your constant viewership. We will bring more sessions to you once or twice every month. Thank you for your presence, and thank you, Anil sir. Good evening, good night. Have a
Great. Thank you.